So I'm going to start with this farm income situation and outlook, and as usual, we keep them short, and so we'll get going right away. We get 10 minutes. We'll begin with these USDA numbers. These came out December 1st. This is the whole ag economy in the farm sector, and this is net farm income, revenues minus costs with some depreciation, some of these non-cash costs in there. It came out $160.5 billion. We haven't seen a number like that in nominal terms. You adjust for inflation, there's a time back in the 70s where it was that high in real dollars. But you can see it's really high. It's 7% plus over what it was last year, which was a good year. It's 53% above the 20-year average. There's a lot of farm income out there. Where's it coming from? This is also from that same report on December 1st. On the left is crops for the figures. On the right is livestock. The vertical axis is both the same, 0 to $100 billion. So it gives you a sense of how big each of these different ag sectors are. Look at the crops there, the last 5 years. That's what the 2018 through the 2022 forecast. Look at that big corn one on the left. It just really, cash receipts to farmers really jumped in the last couple of years. Soybean is up a lot. Fruits and vegetables, and melons and all that stuff, that's all fairly flat. Wheat is up, but you can see wheat is not large relative to corn and soybeans. Switching over to livestock there. Cattle and calves, beef, one of our major sectors in this state, up 2 years in a row. Dairy, after 3 flat years, we see a big jump in dairy cash revenues, and broilers are up as well. So you kind of get a sense, where's this money coming from? It's from extra cash coming to farmers. Here's the percentage changes in cash receipts last year versus this year, then back 2 years. So that top row is 2022 versus last year. About 30% up for corn and beans, almost 40% for cattle, dairy, I should say, 20 almost for cattle. Over the last 2 years, you'll really see that jump in soybean and corn, 90% for corn up over the last 2 years. So you can see some big jumps. Dairy and cattle, again, about 40% up. So where are we getting the money from? It's selling things for higher prices. That's really great. This kind of gives you a sense. This is just the corn and beans. I'll leave the dairy world to Mark. This is corn and soybeans. This goes all the way back to 2010. So you can see the farm price at the monthly, every month for the state of Wisconsin farmer. What I really want you to see is for several years in the middle there, 2014 through 2020, corn bouncing around between $3 and $4 a bushel, soybeans bouncing around $9. And then here come these last 2 years, really high prices for corn and beans, reminiscent of that big run back in the 2011, 12, 13. So higher prices. What goes great with high prices? High yields. I'm an economist, supply and demand. Usually you don't get high prices and high yields. We have. 2022 is another great year for Wisconsin crops. Record or near record state average yields for most of our major crops. Corn is 180 bushels per acre for the state. That's tied last year's record, which was a new record. So 2 years in a row, we've hit the record. Silage, 22.5 tons, a new record for the state. Soybeans, 54 bushels, 1 bushel short of the record we set last year, second highest we've seen. Wheat, 78 bushels per acre, 1 bushel short of the record yield for the state. We've rebuilding hay stocks. December hay stocks are up 3% from last year. 2018, 19, and 20 had record low hay stocks in the state from some bad crops and just changes in production. We haven't seen hay stocks that low in those years since the 1950s, and so we've been rebuilding hay stocks. So we had another good year for crops in the state. So what are farmers nationally and in Wisconsin doing with all that money? First thing they're getting forward is getting their debts in line. So there's a lot of evidence farmers are paying down their debts. These are data from Dave Oppendahl at the Chicago Federal Reserve, and this is for the 7th district. That's that map on the top right. It includes most of Wisconsin, not all of Wisconsin. But it shows the percent of the farm loan portfolio that's in major or severe repayment problems. And what you see there, 13, 14, 15, all the way up to 2019, it kept getting higher and higher and higher, 7, 8%. Then those high prices came for crops, but there's been COVID hit. We had a lot of government payment programs from like MFP, PPP, CFAP. We finally see that portfolio coming down in terms of what percent were in trouble. We were on the verge of a farm crisis. Those numbers in 2020 hadn't been that high since the late 80s. So I said if we had another bad year, if 2021 had been a bad income year, we would have been talking about the farm crisis. 2022, it's down even a little bit more. We haven't seen it this low since 2014, way back when we had those really high commodity prices. The other thing that's happened is cropland values have shot up. You can see the last several years there, 5 years in a row, the red line is Wisconsin, pretty much flat growth rate in terms of nothing happening in land values. Then in 2021 and now 2022, $6,000 an acre was the average announced by USDA in August. That's almost 14% higher than it was last year. And last year was a big jump from that flat lining. So after several years of steady land values, we've seen a big jump second year in a row. So after 2 years of high income and increased land values, the average farmer is going into 2023 in a solid financial position with their debts paid down, loans refinanced with lower interest rates, increased equity on their balance sheets from all those land value increases. Like I said, it's a solid financial situation for the average farmer, not every farmer, the average farmer. The one thing that I've been tracking over the last several years is this Chapter 12 farm bankruptcy filings, and for years we've led the nation in the number of farm bankruptcy filings, Chapter 12. This is the first time I couldn't believe when I pulled them up. We are no longer number one in this horrible metric. We're tied with 5th, 6th, and 7th, a few other states, but notice it's down to 10 active Chapter 12 bankruptcies, that's all. Back during, in 2020, we had 76 and led the nation. We had 76 farm bankruptcy actives in the September 30th of 2020, 41 more than the next state. We were way ahead in that metric. So a lot of this has slowed down because of FSA has kind of had a moratorium on foreclosures, but the banks in general have also done, and we've had high commodity prices, and we've had a large influx of cash from some of these federal programs during COVID. So that's a great metric there. That's one thing I'm glad to see. So everything's doing great, right? So the farm situation seems pretty good. So what's on everyone's mind in agriculture? Cost. That's the big issue now, looking forward. That's a situation now we're looking at the outlook. Won't move. Oh, there it goes. So record costs to plant corn and soybeans. I'm a crop economist. I focus on crops. We're projecting a record cost of production to put the corn and soybean in crop this year for 2023 coming up. That map, the figure on the left is for Northern Illinois from University of Illinois. It shows cost to plant corn for the last 20 plus years. You can see how that black line has really jumped up the last couple of years. And then these budgets here from UW county extension agents in several parts of the state put together some budgets. Iowa State is the next one. NIL is Northern Illinois. What these are the cost of production to plant corn and soybeans, silage, and then the rental rate they assume. But corn, $1,000+ an acre to plant corn in Wisconsin. Silage, $1,100+. Soybeans, $700. Iowa State came out in January as well. Almost $1,100 there. $1,300 for silage. $760 for soybean. Illinois came out a little earlier. Almost, not quite. We'll say $1,170 for corn to plant an acre of corn in the state of Illinois. Soybeans, $820. And so you take those, what those yields are getting, and these are the break-even prices that these require. You can see that $540 to $580 for corn. So keep these prices in mind when you hear John talk about where the market's going for the future for corn and beans. $540 to $580 break-even for corn. $50 to $60 per ton for silage if you want to break even. Beans, you can see that's all over the board there, everywhere from $11.66 in Iowa all the way up to almost $13.40 here in Wisconsin. So it's going to depend a lot on the cost of production. So crop costs are up, and this is sort of an estimate of the average. Farmers are really very heterogeneous in their cost of production, but think of those break-even prices, what you need to break even on your corn and beans planting that's coming up here in a few months. So what else is going up? Land rents are up. All those land values shooting up. Well, of course, land rent's going to follow. Wisconsin average came out in August is $145, up 9% from last year. Irrigated acreage is $250 an acre. That's 5.5% up. That map is from the USDA. It shows where we are relative to our neighbors. The national average is a 5.5% increase in land rents. Most of the Midwest is in that 5 to 7. There's Wisconsin circled at 9. Only Iowa was higher. So our rents jumped up more than the Midwest, and definitely more than the national average. There's a map of some of the counties in the state. The county average, Lafayette has the highest at $235 in the southwestern corner there. Grant at $217. Up in the next is Brown, up in the Green Bay, I can't read the numbers, too small, $210 I think it is. And Dane County at $206. We got 4 counties with an average rental rate over $200 an acre. Record low interest rates have ended. This is interest rates all the way back to 2010 from the Federal Reserve down in Chicago in the 7th district there. But you can really see starting in October, just like for everyone else, these rates have really shot up to, they're basically in the 6% range. So a large increase in interest rates. So you can kind of see land rents are up, interest rates are up. It's a continual story. This is from the USDA. They have their ag outlook forum in December down in Kansas City. What these are, the horizontal is how much we farmers spend, and this is for the whole farm economy, not just the crops or not just livestock. So the further to the left it goes, or to the right it goes, that means more money spent, and then they're sorted by percent increases. Where are the largest percent increases? Fuel and energy, 47% up from last year to this year. Big jump in fuel prices. Fertilizer, 47% increase. Interest, 41% increase. Pesticides, 36% increase. Feed, up 17%. All those high crop prices mean high feed prices. And you can see the rest there. Only seed is only up or down a tiny bit. Oh, I thought it's on my screen. It's advanced. All right, okay. So, thank you. I'm sorry. So we've seen these numbers here. You can see this. It's a large, no, this is weird. This is a different screen than that one. So you can see farmers are anxious. So we got these cost increases in the 40+% and all these, it's a cost increase. It's a cost increase going across all these different categories. So what's going on in 2023 is farmers are very anxious. How high are these costs going to go? When will the costs start to decline? There's some evidence of that already happening. These numbers are from December usually, and there's been some like fertilizer and some of these energy costs have come down. And the real big one question though is, will commodity prices stay high enough to justify these costs? That's going to be the big question. We got margins out there. We can make money. You saw those break-even prices for corn and beans. We'll get some ideas from the dairy world. Will these make sense? Can I continue to make money at these high prices? So here's our situation after 2 years of high income and land value increases. The average farmer is starting 2023 in a solid financial position. Wisconsin no longer leads the nation in Chapter 12 farm bankruptcy filings. That's a good evidence of that we're in a solid position. Outlook is high costs. It's surprisingly thin margins for these kind of commodity prices we're talking about. It's because costs have really increased a lot. So thank you.